you all here. Just wanted to say, welcome to this AMA. Thanks for hosting me, Bogdan, Adriana, and the whole How to Web team. I know this has been a challenging time for everyone, so it's great to have an avenue for people to chat and ask questions. So my name is Carlos. I'm one of the two managing partners of Seedcamp. We've been investing in startups all over Europe since 2007. Over 350 companies that we've backed over those 12 years or so. And many of them have been Romanian, as you know. Some of the big names from Romania have been companies that we've worked with. And I'm happy to call some of the How to Web team my friends. So yeah, hopefully you guys get some great questions in and we can have a good chat. I think the live comments are on. So if you want to just comment anything there as well. So Adriana, let's start the questions. Question 1, what is it? I have to raise funding for my startup. What should be different than 3 months ago? So I think that, first of all, there's going to be a lot of different questions that are probably going to come up about fundraising. And we're probably going to tackle these over the course of these 30 minutes in many different ways. So let's look at the things that we know and the things that we don't know, right? What we don't know is how many investors in aggregate are not investing. The fundamentals of fundraising aren't any different. Like you build a product, you identify a customer, you find a team that's excellent, you come up with a great positioning strategy, and then you go to market, you get some great metrics, and then you go and engage with investors who could give you money. Those are the mechanics of fundraising, right? Those haven't changed. But what's changed is the supply of capital. I think it's clear that with what's going on, some investors are putting a pause, and therefore that means that the bar is a little higher. For the ones that are investing, the bar is a little higher for investing. So what does that mean when you have a bar that's higher? Well, it means that the things that you need to achieve are probably going to have to be more notable for you to grab their attention. So what could those things be? Well, it could be that if your product is an enterprise customer or it is a consumer customer, that they're still buying. That's pretty meaningful in times like this. If you are in a business where the enterprise customer is still buying and still paying money, that's pretty meaningful right now. So that is going to be a very different experience for you as a company fundraising if you can show that you can still charge money during these times. But putting that aside, what other things could you use? Well, great teams are still a big thing for early stage founders and investors. Like if you can find a great team to complement you, or you are somebody that thinks could add value to a great team, and you then go fundraising together, that's a huge win. And what do I mean by a great team? It's not just about the skills, it's also about who you are, where you worked, what have you done. For example, I mean, I'm going to exaggerate to make the point, but like if you worked alongside Steve Jobs and you were, in the development of the iPhone as one of the team members there, and now you're starting a hardware company, that's going to be great. That's going to be obviously something that people are going to prioritize, even if you don't have product. I mean, that's an exaggeration, of course, but you get what I mean. Like greatness comes in both what you've done, but also what you can do collectively. So that's on the team side of things. And on the product side of things, I mean, look, people are still building products that are needed. If you're building a company that's going to obviously function in the future and it's going to be part of a big movement, whether it be artificial intelligence or be it healthcare or anything that helps people with an ongoing world with COVID in consideration, whether it be through entertainment or through communications, all those things are going to be interesting. So I think if you have to raise money for your startup, what should be different? Well, I think hopefully I covered all the different elements of it. You just need to decide like whether you fit into the category of businesses that benefit or those that are likely going to have to amend some things in order to really stand out. So hopefully, Cyprian, that answers the bulk of your question. And I know that there's probably more subtlety specific to your circumstances. Okay, Matej, how should I approach my current investors to extend my runway without raising a new round? Yeah, that's another really tricky one. So similar to the fundraising one, there's going to be a couple of different elements about your company that should be able to survive this period. Otherwise, it's going to be very hard for existing investors to sort of take a risk. So in 2007, 2008, several investors came together and helped companies that they had invested in through convertible loans and convertible bridges, which is why the terms came up that now we use for many different things. And part of the reason why those legal instruments came up was because they wanted to figure out a way to support a company without pricing it. And that was because nobody really knew exactly what it was that the company was going to be able to achieve with that money and how you could price it and what was the key elements that made that company successful now and in the future. So if you look at it and you unpack that and you say, okay, I first of all need to figure out how to negotiate with my current investors so that they feel motivated financially. Maybe one way of doing that is by suggesting that it is some sort of preferred convertible or some sort of convertible that allows them to not feel like you're forcing a certain valuation on them. So that just moves the commercial conversation aside. And there's different mechanisms. Different jurisdictions have different mechanisms. In the UK, there's the Future Fund, and some companies are starting to use the Future Fund's cash to be able to double the amount of money they're getting from the existing shareholders. But anyway, so I'm just going to park that now, the whole financial side of it. Now let's talk about the product side of it. On the product side of it, as I started saying, you're going to want to talk about how you're going to survive this. I think the key thing with surviving this period is that there's going to be revenue streams that you need to identify that are not your traditional ones if you don't see where you can make money in the next 12 months. So if you're an enterprise company and all your enterprise contracts dried up, are there any other enterprises that could potentially pay for your services? Is there a small pivot that you could do on your product that would enable you to charge money now? Is there a consumer-facing variable of it? Is there a different industry you can tackle, right? So the talking to existing investors and extending your runway is those two parts, right? The first part is, how do I do this deal so that investors are motivated to invest? The ideas I mentioned were, is it through a convertible? Is it through a mechanism that they feel that is not going to penalize you, but isn't going to penalize them? And the second part of it is, are you going to showcase anything that really is going to survive this period and you're going to come out stronger on the end? So hopefully that helps address that question, Matej. If you want to ask a follow-up, just type it in and I'll try to grab that. Okay, next questions. Wanda, how is Seedcamp's reach in the pharma sector and how could you support a medtech startup in this sense? So I must admit, Wanda, pharma is not our specialty. It's an area that I would love to do more in, but it's not one that we specialize in. What we do more is just health tech, and that can be a broader conversation. So software that helps the health industry. So for example, we've done investments in diagnostic technologies, in computer vision for diagnostic technologies. We've done patient management systems. We've done healthcare systems. We've done health tracking. We've done fertility, menopause, mental health. So I think that there's a periphery of healthcare that I think an investor like us can do, but I think it becomes very hard for us to do very specific pharmaceutical stuff, especially with a very small fund relative to specialists in the sector. So my recommendation is, if you're going to do pharmaceuticals specifically, there are specialist investors for that. Okay, next question. Let's see. All right, so I'm going to revisit the question from Cyprian a little bit on the fundraising. I think the fundraising one, I think, is going to be one that is going to pop up the longest here, just the general thread. So I think when it comes to this period, first of all, we don't really know how long it's going to last. So I just want to encourage everybody that, you know, it's going to take a while before everybody knows what the full impact of this is, and it's just really a matter of staying nimble. And I know that it requires a lot of energy to do that and stay strong during this period. But I think it's having frank conversations with your team and your colleagues about how you can extend the runway. And that's going to also help you with your fundraising journey. All right, from Christina. What was the longest relationship building journey with the founder that you had? What about the shortest? So I think the fundamentals of your question, Christina, is around advice that a lot of investors give founders, which is, build a relationship. And I think the idea behind building a relationship is sound. You want to find somebody that you can work with, because a lot of these relationships take time. You're going to be, and effectively in a marriage with these investors for a long time. And so the general genesis of the question makes total sense, right? Now, you don't control when you meet these people, right? So sometimes you can meet a founder, or you can meet an investor in a month and you really get along. You strike it off. I mean, that happens to us in life as well. So I don't think that there's a formula of what the minimum is or what the maximum is. But I think that the shortest relationships have been ones where, and I think your question doesn't specify short bad or short good. I'll tell you, the shortest bad relationship with another investor or another founder has been usually where you don't trust them somehow. Something happens and then you lose trust. That's 90% of the time when it's very short. And then what's the longest journey? I mean, look, there's some founders that we've backed twice, and I guess you could count the second time we've backed them. I think many of you know Miguel. We've backed him on his second company, Ezra, which does cancer screening through MRIs, and that's been a long journey. So technically, I guess the second company has been a long journey. So hopefully that answers your question. Go for it. Next question. All right, here we go. Alexandra. What do you expect besides return when investing in a founder or founding team? I mean, I think let's determine what it is that the relationship between an investor and a founder is, right? I think that most people in our industry, especially the early stage, late stage is a little bit different, so I'm not going to speak to that. But early stage, a lot of people do this because they love it, right? A lot of investors, especially investors that have made money, have made so because they've done something that they feel so passionate about that they want to share some of that experience with the people that they then give money to. So it's not very unusual that a lot of this relationship is not entirely financial. It's also trying to give back, trying to help others, trying to be part of a community where you can co-achieve, where you can both feel good and what you've done together. So I think because of that, you have an expectation that you have a good relationship with your founders and the founders with you as an investor, that it goes both ways. You can help each other. You're learning. There's so many other softer ways of getting value other than just a return. The intellectual stimulation of it, exposure into different sectors, learning. So I think that there's no hard set expectation, Alexandra. It's not like, let me quantify all these things. Of course, I mean, at the end of the day, you're an investment fund, so you expect that the business will do well. And the founder expects the same as well. The founder expects you to help them make a return. So, there's that. But I think that all the other things around it make that experience very memorable. Okay, a question from Barry. Is Seedcamp invested in baby tech? My wife is working on health product for parents. Yeah, I guess we have. I mean, I think it depends on where you draw the line. We've invested in a couple of companies that help people get pregnant, so I guess that falls into the baby tech category. I think parenting is a very important. I think now, especially with all the parents at home, you see this huge increase in parents wanting to figure out how to not only keep their kids entertained, but how to educate them. And I think your specific question was around baby tech. So like presumably a very finite period of a baby's life. And so it doesn't change the fact that, there's a huge boom in the population in parts of the world. and that there's technologies that we need to help, whether it be with health or entertainment, or whether it be in how to support parents that are very busy. So yeah, we definitely look at it. I think where we draw the line or have a harder time investing is, I think IoT or hardware for babies is a little harder than software that helps parents with babies. And I think partially it's because of some of the economics of the two things. It's not to say that we won't. We long time ago, about maybe like 6-7 years ago, we invested in a company called Teddy the Guardian, and it was a teddy bear you might have heard of that helped parents monitor their kids. And you know, the economics of hardware can be kind of challenging, but it doesn't mean that we wouldn't look at it. But yeah, we do invest in baby tech or parent tech or ed tech or whichever way you want to call it. All right, Tutor, do you know any free ASO tools or a good book on how to find markets with a big traffic and low products? Mate, sorry. I think that's just research. I don't know if I have any good book on about that. I think most people that I know that do this end up just lots of Googling. All right. Another question from Tutor. A lot of funds have recently pivoted their strategy, are now looking at healthcare and work from home solutions, the new Zooms. Do you see a risk of the bubble forming in these verticals to the detriment of other industries? That is a very good question. Very good question. The short answer is yes, it probably will be. There probably will be. There probably will be a bubble of some sorts. I mean, how many streaming technologies do you need? How many Zoom-like competitors do you need, right? There's probably going to be a few that win, and then there's going to be a lot that are going to have to be repurposed for different vertical applications. But I think your question has a lot of other fundamentals to it, and I think if I go back, I know that one of the fundamental questions a lot of people are asking is around fundraising. So I'm going to go back to Cyprian's question from the very beginning. It's like, if you're a company and you're not in the space of working from home solutions and all these other areas that are hot right now, is it hard or is it easy to fundraise? I think that's the dark side of your question, Tutor, right? There's the good side of the question is like, if you're in one of these work from home technologies, you're probably going to have an easier time fundraising. If you're not, you're going to have a hard time fundraising. And so, you know, there's your question has so much depth to it, because I don't really know that 2 years, 3 years from now, we're going to look back and think, wow, you know, we probably overinvested in these technologies. What we'll probably have is we're probably going to have quite a bit of technologies that are going to be merged into products. You know, I'm starting to see a lot of like Slack meets Zoom meets this meets that. And then you're going to have 2 or 3 winners that come out of that. And then a whole bunch of companies that raise money and that probably won't go anywhere. And then there's going to be a whole bunch of companies like the one Cyprian was asking about, which should have gotten funding, but didn't because they were not in that attractive sector. But frankly, we won't know for a few months. But I think it's a very good question, Tutor. I think we will probably have to wait and see. All right. Any other questions? All right. I think the Cyprian questions keeps on popping up, Adriana. So I'm not sure if it's because you want me to go deeper into that one. So I will. Oh, from Anca. What are the least expected circumstances of meeting with founders that got you to invest in the team? Okay. So because Cyprian's question around fundraising is a theme for this particular AMA, I think maybe I can tie that into this question from Anca, which is the least expected circumstances of meeting with founders that you got you into invest in them. I mean, your question, if you mean it from the point of view of least expected circumstances physically, one of the companies we invested in, I met through a conversation on Twitter, if that's the nature of the question. But if you mean it from which is the least expected circumstances of meeting with a founder that we invest in, a lot of times have been introductions that I was not expecting. And that's why I bring up Cyprian's question about what's fundraising like going to be for the next 3 months. It's like, if you can find a situation where serendipity works in your favor, you can probably still get access to some of the investors that are investing. One of the stories that I tell, I wrote a book called The Fundraising Field Guide. If you haven't downloaded it or got it, it's available on all the typical platforms. But I tell one of the stories in the book about one of the companies that we invested in, where the founder had gotten rejected over 80 times. So a lot of rejections. And what happened was that he had an appointment to see this one investor in Germany. So he flew and arrived at the offices of this investor. And the investor said, "Oh, I forgot I had this meeting." So this founder is like, when he tells the story, it's a lot funnier, of course, because he tells it with a much more passion. But he's like, he says, "I think I only had like €5 in my wallet, and this investor forgot that I had the meeting, that I used my last €100 to fly over to meet." And so the investor felt bad and said, "Hey, let's I'm going to the airport, get in my car, and we'll have a chat." And so got in the car, drove to airport, pitched him on the way to the airport, and that's how they invested. So that's kind of sometimes in terms of expected or not expected, that's sometimes how things can happen. You never know when you're going to meet them. Okay. Let's see. Have you done any investments since the beginning of COVID crisis? How does that work? How do you build a relationship over Zoom? So we wrote a blog post recently and it's available on the Seedcamp website, about the recent investments we made. We made 3 investments about a few weeks ago, and we're actually in the middle of doing an investment review for making investments next week. So I think during this Corona period, we might end up doing something like 6 investments in total by the time all of this is over. So definitely probably one of the few investors that are making a lot of investments during this period. And I think the question Anca asked about expected circumstances, well, it's a little harder to have unexpected circumstances over Zoom, for sure. And also when it comes to looking at things from getting to know the team and having conversations and going out for dinner or anything like that, it's obviously not possible. So, the question around how do you build a relationship over Zoom is a good one. I think ultimately the one thing that has helped is that if we were to try to have done this a year ago, I think it would have not been the same. But I think that because everyone is on Zoom, I think we've all become comfortable with oversharing or being more authentic over Zoom than I think maybe a year ago. I think people are now more comfortable with like their kids running around in the background or their dog barking, and that opens up conversations, right? It's like, "Oh, is that your dog?" Or, "Where are you?" "Oh, is it the countryside?" And I think that level of intimacy didn't exist about a year ago. So I think that we're living in times today where the nature of these conversations is changed entirely, fundamentally. I think you can now connect with people. People are more willing to connect now on Zoom in a way that they weren't able to. So yeah, we look forward to hopefully making more investments in the near future. And thanks again to How to Web team for posting that link of how we invested, and also for the book. A little bit of shameless self-promotion, as well as, while we're at it, maybe shamelessly self-promote the podcast, which is always a lot of fun to host. Can't believe I'm on episode like 209 or something. It's insane. Some great conversations there. I started that podcast a long time ago because I wanted to keep on learning, and now it's taken a life of its own. So if you haven't checked it out, check it out. So how is pivoting different in a time of crisis that is usually referred to in the books? Well, I think pivoting in the books is usually referred to when there's a lot of people buying, right? So like if you think 3 years ago, pivoting 3 years ago would have involved going from one group of potential customers that have cash available and are willing to pay, to another group of customers that are potentially have cash and willing to pay. Where we are today is a bunch of customers that are afraid to pay or not paying or cutting costs, to another group of customers that are afraid, maybe not paying, maybe cutting costs. And so very different way of pivoting, because you don't really fully know for sure whether your product is not connecting with the customer because there is no product market fit, or whether it's just a bad time where maybe, especially if you're selling to enterprise customers, where the people who would champion your product internally have been fired or the company's been restructured, and therefore it's hard to. So that's all the negative. So like Klaus, I don't want you to just think that, oh man, that sucks. The positive is that I think that there's a lot of companies that are looking for cost efficiencies. So similar to how some companies might be cutting costs, other companies will be buying, and they will be buying software or tools or hardware or anything that helps them be more efficient in a circumstance where they have less people. So that's where it gets tricky, right? Like, it's always easy to look at the negative in some ways and think, oh my goodness, this is the worst time to pivot. But no, in many cases, there's a bunch of customers that are actively looking for technologies to communicate with their teams better, to communicate with their customers better, to cut costs in terms of how they can use AI. So I think it's just about doing research around which customers are purchasing today. The next question is how to communicate with the team and open communications channels with every team member. Now, that is a very, very good question. It takes a lot of planning. I think the whole world has learned how to work remotely at the same time very quickly. And I can only share with you the lessons that we've learned in the Seedcamp team. But one of the things that has come up has been this idea of how do you get everybody not feeling left out. So we do little things like we organize the team into sub little groups, and then those sub little groups meet quite frequently, and then we meet together at an interval of once a week minimum, and we then have the subgroups meeting once a week minimum. So we have like a legals group, and we have a deal group, and we have a portfolio support group, and we have a social hour, and so each one of those subgroups are always meeting. So we make sure that there's an interval so that nobody feels left out. Other team members have also done ad hoc drinks, and that just 6 p.m. maybe once a week, somebody just says, let's have this. So we're trying to keep those channels open. We use Telegram and WhatsApp, and we're constantly in communication there. So I think it just takes some planning and saying, okay, guys, let's make sure that we're all in communication somehow. And then we use the sort of light messaging systems like WhatsApp and Telegram as a way of constantly staying in touch. And then just being willing to open up more, because I think it's very difficult to for some people, it's going to be a lot more difficult than others. And for some people, there's a lot more impact to them time-wise than others, but it's just making an effort really that matters. Cool. So I don't know if that was the last question or if there was any other questions. Adriana, maybe you can let me know if you want me to elaborate more on this last point. Okay, so I will. So on the remote work things, just to let you know the tools that we're using. As I said, we're using Telegram, and we make little small groups of Telegram. We have Telegram groups for our tech, for our HR, for our accounting, for our general deal team. We use Mobilize for our teams. And that's online. Just go to mobilize.com. We then use Zoom meetings, of course, for the sort of one-to-ones. And then we use one of our companies called hopin.to for the larger events that we host. So that's the tool stack that we use, in case you're wondering. And I recommend at least any one group has at least once a week touch point. You should not ignore any team member to be part of one of those. And each one of those groups needs to be interacting with each other for at least once a week. And so I think that's that, guys. I know it's fun to meet like this. Hopefully this was useful to you guys. I'm available on Twitter at CEE. And Seedcamp is obviously, we got a website where you can fill out if you'd like to us to consider you for investment. And my email is carlos@seedcamp.com. And as I said, self-promotion, the podcast, Seedcamp podcast, fundraising field guide, the book, and stay in touch. And thank you so much, guys. Bye.